first trading day of the week is in the books and it was a good one. What led to today's decline and our gains here to stay? I guess that's what we'll discuss on this edition of Markets Tomorrow.
Absolutely, and so to discuss that and take the discussion forward, joining in on the show are our experts. We've got Andrew Holland, CEO at Ambit Investment Advisors, joining in. Prashasta Set of IIFL Wealth, as well as Sandeep Vagle, Founder and Managing Director at afloat Technical Advisory Services. Nikunj, given the fact that we did see a good comeback for the equity markets first time since November, do you think that this momentum is going to stay afloat, given that it's a very heavy macro week also?
Yes and no, both. But I'm going to hedge myself simply because the news flow currently, both locally and globally, is divided. So since Nifty has gone up by about 100 points today, you cannot undermine the price action. And surely 6150 has emerged as a line of demand for Nifty watches. So IT clearly is the big propeller, and the surge or action in the bank Nifty is making the Nifty look good. But the tricky part is that Infosys really has raised the bar for large cap IT. And later this week we have HCL Tech, Wipro and TCS which are due to declare numbers. Can the IT index go up by about 5 to 7% on a weekly basis? The answer to that is no, because somewhere the law of gravity would catch up. These stocks are looking overextended. Also bear in mind that currently the correlation trade is not working out. Rupee is at a fresh 1 month high. The market breadth is also not holding on. Banks, clearly the worst is not behind them. And if I look at cyclicals, most of the cyclical stocks already have corrected. So L&T is down from 1150 to about sub 1000. Crompton is down from 135 to about 120. Thermex also is down by 10% from the recent high. So minus IT, this market has got no life. And for IT now, I guess ownership issues and quarterly numbers where the expectations are running high could be the tricky factor. So at best, I would say markets would hang in there. 6150 is here to stay. And what really will propel markets higher, Avan, has to be something global. I don't think locally there is anything which will take us high.
Okay, let's take that discussion forward then. Prashasta Shet, going to start off with you. And do you think that what Nikunj said really does hold true, that with respect to the next trigger, despite the fact that we have a lot of events lined up domestically, that it's going to be the global factors which will drive our markets up?
No, I would kind of agree to what Nikunj has said. I think the only caveat would be that if inflation numbers today, for example, come in, much lower than, what markets are pricing in, I think you might see some amount of excitement coming in, let's say, banks and cyclicals and other stocks that have been kind of beaten down over the last few days. Having said that, I think, is there a case for markets to see a substantial up move on a sustained basis from here on? I think I would find it very, very difficult for us to do that. I think obviously the IIP numbers haven't been that great. The first set of results that have come in from Exide have been extremely poor. So I think, I would think that for market to make fresh highs from where we are, I think it has to be a global factor, whether it is, let's say, a US yields coming off, or people essentially believing that Fed might pump in more liquidity because of disastrous US numbers, and so on and so forth. I think it will be the global factors that can draw the markets up. I think interest rates or inflation coming lower tomorrow could be a temporary factor, but not a sustained one.
Sandeep, jumping on today's price action, surely 6150 seems to be emerging as the line of demand for the bulls.
Absolutely, Nikunj. I think you summed up very well. I would just add on one point to it. Having what you have said, we are looking at a limited upside, which is a 80 to 100 point upside. And were that top to be taken out, then probably we may talk of a 65-50. But even if that happens or occurs, we may come back down to 6300. So I would talk of a range now slowly shifting to 6200 to 6400, and probably in case the top is taken out, we may make 6200, 6250 as a base. That is what it is. I don't see a runaway rally beyond that. So though the view is positive, I think a limited upside is what I would talk of in the days to come.
Okay, that's a technical check on the markets. But Andrew, let's start getting stock specific. Infosys, stupendous performance. There was positive commentary from the management. What exactly do you think one should expect from the likes of TCS and Tech Mahindra as well?
Yeah, I mean, obviously, Infosys had an increase in margins, which has obviously, helped their figures. I'm not expecting fireworks from many of these companies. I think, will be an inline quarter. I wouldn't extrapolate what Infosys did and say that's going to happen across the board. So, I'm not trying to, run ahead of these results. I think they'll be okay. I don't think they're going to be anything spectacular, that's for sure. So, great start. But I mean, if you look at IndusInd Bank's results, I mean, that would tell me that the banking sector remains under pressure. And we think the banking sector is going to be the sector which leads the index down over the next few months. We're concerned on a number of macro fronts outside of India. In terms of China, there's something happening there in terms of the markets telling us that the GDP growth is probably slowing more than we expected. I think, whilst the figures from the US on Friday in terms of jobs data was affected by weather conditions, I still expect the US to grow a lot quicker than consensus, and we could see tapering happening a lot quicker than people are anticipating right now. So, whilst we have some relief today in terms of the markets and the currency, expect that to reverse in the next few months.
Okay, let's nail it down to the stock of the day, and it's not really IT, it was a pharma company, Ranbaxy today registered its biggest fall since September 2013, while good old US FDA problems have come to a fore. This time around a 483 has been applied to one of their new plants. Prashasta, every time markets seem to believe that the worst is behind Ranbaxy and Daiichi will be able to turn the business around, the stock does a bungee jump.
No, that's true, and I think the other point is the stock is not cheap either. I think if you look at the core earnings, so I think investors, have been buying this stock on the hopes that things will improve, or you will, I think that's one, and second, I think people have been expecting a buyback, from Daiichi. So I think those two essentially are the reasons why the stock has been kind of moving and is where it is right now. But fundamentally speaking, I think from a core earnings front, the stock is expensive, and B, I think the company has continuously disappointed, and it's still not clear whether the issues have been resolved. It looks like that it will just take some more time, and much more time than what market will be patient for.
With respect to the banking sector, what is it exactly that you're expecting? IndusInd Bank did put out its numbers and it wasn't a bad quarter for them. Where do you think we're going to see outperformance and underperformance within this basket?
My sense is I think you might continue to see a poor set of numbers by essentially banks which are focused more on the corporate side of the lending. So that's a PSU bank or a ICICI Bank. I think you could continue to see NPA issues coming into these set of banks. I think in terms of numbers, I think you will still continue to see banks which are focused more on the retail side of the business. So it's a Kotak or a HDFC Bank, or even let's say a name like Bajaj Finance in the NBFC space. I think those should report better earnings. So I think retail focused NBFCs as well as banks, I think, should report good set of numbers, and corporate focused banks, whether they are PSU banks or private sector banks, might continue to see some stress.
Sandeep, for those who bought into Bank Nifty, it's not been a very profitable trade. Do you think the Bank Nifty has turned the corner, or it continues to be an index which you want to sell on every uptick?
Not really, Nikunj. I think it is, I won't say turn the corner, but it has made a temporary bottom at 10,800 at 20, and the move can extend by another 150-200 points. Though personally I would not like to play Bank Nifty for 200 points. It has to be at least 400-500 points. So in that sense, I am not that enthused. But if you ask me my view, I would talk of a at a current level of 11,100 or 1150 points here or there, I would talk of 11,250-300 price target on the Bank Nifty. So definitely you cannot go short at this level.
And to stay with the banking space, do you think that post IndusInd Bank, the earnings, perhaps for most of the entire private sector banks will also post higher NPAs, and that PSU bank expectations could be a bit better than expected?
No, I think that the run-up in the PSU banks was mainly on the back of expectations that they may pay higher dividends, because obviously the government needs money from anywhere it can get at the moment. It's not getting it from share sales, that's for sure. So that was the reason for the run-up in the PSU banks. I mean, you speak to any corporate, reality on the ground is that nothing's really changed. The markets might be higher, but business is still, extremely tough. And the banks really haven't made any significant headway in recovering or restructuring a lot of the loans which they need to do. So I expect the banking sector to really, show some poor results this time around. I think last time around it was a bit of a surprise on the upside, and I think we're going to be surprised on the downside this time. And I think Indian banks is a lead indicator for that. So banks would be a big short for us.
Rajasthan, where does ITC fit in the overall scheme of things? Because ITC is also due to declare numbers later this week. You also have a decent exposure to ITC. The stock is corrected from levels of 380, 390 to about 320.
So my sense is it's not going to see a huge amount of movement in either direction. I think what is very, very clear is that there is a clear slowdown in terms of consumption. So my sense is, those 380 kind of levels are unlikely to come, I think, in a hurry in names like ITC. I think at the same time, I think this is one stock where you are also sure that the downside momentum in terms of slowdown is also not going to be fairly high. And if you see, I think valuations, obviously, you have the risk of cigarettes, and because of which it trades at a discount. I think ITC is trading at pretty much the same multiples at which your imamis of the world are trading. So, any significant derating in terms of valuation for a name like ITC looks fairly difficult. But at the same time, my sense is that any significant upside is also very, very unlikely. So, if you have a view in which that markets are going to be fairly range bound and you want to be defensive, I think you can own the stock. But if your view is that the markets are going to go up, then I wouldn't think that ITC will participate it to that extent. So, depends on the view. Our view is that, it might kind of, remain range bound, I think, over the course of the next 2 or 3 months. And it's better to have some names which will provide you protection on the downside as well. So that's where it kind of fits in the overall scheme of things.
Sandeep, what are the charts indicating for a Bharat Forge in Indian hotels?
Well, I have a buy in a Bharat Forge. I am personally very bullish. Indian hotels also I am positive, but choosing between the two at this point in time, I would go with a Bharat Forge. I see a 8 to 10% up move from the current level, so I would be a buyer on every bit of a decline.
We're focusing on individual stocks to keep on your radar. We start off by getting you a buzz as to what exactly the dealing rooms are advising. Gargi joins in with the details. Gargi.
Well, the first stock is Coal India. Remember, just ahead of the dividend meeting that the company has, the board meet that's scheduled for tomorrow, there could be some buying that we see in trade tomorrow. Remember that we have already seen a run-up in Coal India. There are talks that there could be a 13,000 to 14,000 crore rupee shell-out coming in from Coal India. And remember, the government owns 90% stake in the company, and because of the divestment being cancelled, this is the other route that the government is exploring to shore up funds for this particular year. So clearly, Coal India could be a buy candidate in tomorrow's trading session. The other one is Tech Mahindra, and overall the street has been bullish on IT counters post Infosys positive surprise coming in on the December quarter numbers. There is buying that we are seeing in few of these IT names. Remember that Tech Mahindra is already trading close to its record highs, and probably by the next week we could see that level also being breached. So clearly there is some buy recommendation on Tech Mahindra too. Dealers expect buying to continue in IT stocks because demand has been good. The overall outlook globally has been improving. Plus valuations of few of these companies has remained below giants like Infosys and TCS. So some follow-up buying that we could expect to continue in Tech Mahindra.
Alright, Gargi, thanks a lot for that. Rashista, for the moment, you don't have any big thing coming from the global market, but the dollar index has plunged to a fresh low. Rupee is at a fresh 1 month high. Do you think the currency interplay could be in big interplay, at least in the short term?
No, I think the currency is likely to behave, I think, slightly volatile, I think, depending on how, global things pan out. I think tomorrow, if you have a number which shows that the US economy is stronger, and let's say the data which we got on jobs report from US was one-off data, I think the dollar will bounce back. So my sense is it will be very, very difficult to take a short-term call on rupee. My sense is rupee is going to be, fairly range-bound between, let's say, 61 and 64 over the next 2 or 3 months. So very, very difficult, I think, in that range to take a big call on how it will kind of impact, the sectors. I think it's going to be a non-event.
Fair enough. Sandeep, run us through the other recommendation because you already flagged up Bharat Forge.
Well, I would talk of the stop loss and the target. Tavan, a stop loss of 340 and a target of 357. A sell in Ranbaxy is the second call. Stop loss of 452, target of 410.
And the big concern for markets about 10 days ago was in order to bridge the fiscal deficit, would government send a lot of paper via the FPO route? But for the moment, looks like that concern has got arrested. Coal India will not hit the FPO market. In fact, they are planning an interim dividend, and IOC overhang is also not going to be there because most probably ONGC will buy into ONGC.
Yeah, I mean, a lot of brokers came out and said that would be a headwind for the markets. But my view is always this: it's a headwind for the markets if you want it to be a headwind for the markets. If you've got strong fundamentals, investors would lap up your shares. So the fact is that a lot of these companies, there's in terms of divestiture, we're really not the kind of clear favourites for FII investors going forward. So I think it's more of a sake of that. It's not really the right companies to be selling to bring in capital, rather than that the market was going to face some headwinds because of liquidity issues. Yeah, at the margin it does. But not really to the extent which I think a lot of people were talking about. It's never been one of the factors which we felt the markets would fall.
But just run us through how exactly you would be approaching the oil and gas basket, because no doubt the news flow that has been coming in has been fairly positive, but the move is only just starting to build up when it comes to names like Reliance Industries and ONGC. How would you be playing it?
No, I think at these levels, I think both of them are fairly priced. I think, for Reliance, I think petchem and refining continues to be the mainstay in terms of EBITDA, and I don't think anything significant is going to happen in terms of recovery in the gas volume. So, I would think that Reliance continues to be FY16-17 story rather than FY14-15 story. So I think it's going to be, a trading stock, anything below 820, 830, I think it's a good buy, and, anything above 920, 930, I think you would just sell. I think with respect to, ONGC, I think if this whole talk about ONGC buying stake in IOC and cross holdings and all of these things materialize, I think it will be very, very difficult for stock to do, substantially better than where it is right now. I think, my sense is you would see some sell-off happening in that stock. I think the other thing and the other question mark is that how much of actual increase in gas will essentially benefit both ONGC and Oil India, because the fear is that a lot of this gas price hike will be transferred back to the government, either through a subsidy of through downstream companies or a higher dividend payment. So if higher subsidies happen, obviously I think that's not going to help. So my sense is ONGC anything above 300, 305, I think I would be a seller, and I wouldn't think I will perform.
All right, gentlemen, thanks so much for taking the time out and joining in with those views and giving us your expert stock picks on the show. We wrap it up on Markets Tomorrow. Thanks for joining in.